Wondering where the smart money is heading in June 2025? In today's video, I'm sharing my top 5 stock picks, companies that are not just surviving but dominating their industries and segments. I'll break down their recent moves, financial strength, and why I believe they're long-term winners. Hi, my name's Gotham, and on this channel, I talk about the stock market and achieving financial freedom with the power of options trading. So if you enjoy content that can help you retire early and achieve financial freedom, don't forget to hit that like button, subscribe to my channel, and share this video with your friends and family. Also, if you are new to the options world or are simply looking for one-on-one guidance to help you shortcut years of trial and error and avoid costly mistakes, click on the coaching link below and I'll be honored to help you out. Before we begin, I wanted to make a quick mention to all the fathers watching this channel today. Today, June 15th, is Father's Day here in the United States, so I'd like to wish all the fathers watching a very happy Father's Day. I'm also curious to hear where you're watching from today and if you are celebrating. Let me know in the comments below. Now, let's dive in and see how we can make some moolah. My first pick is Meta. Meta's going all in on AI, and I mean billions deep. Just this month, Meta announced a $14.8 billion deal to acquire nearly half of Scale AI, a major player in labeling data for artificial intelligence models. This isn't just an investment, it's Meta's move to power the future of AI. On top of that, Zuckerberg's building a dedicated AI research lab and aggressively hiring top talent to build something that he calls superintelligence. Meta's also scaling up Llama, its open source large language model, to compete with OpenAI and Google. Looking at Meta's fundamentals, it has a pretty solid upward pointing 5-year chart. It made an high here back in February of almost $740. It's currently trading around 683. It has a PE ratio of about 27, in line with the S&P 500, which is pretty good. Looking at the earnings per share, it's been beating analyst expectations quarter over quarter. Revenue has been growing consistently from 39 billion in Q2 of 2024 to almost 42 billion in the last earnings. Looking at analyst recommendations, we have pretty solid green here, light green being buy and the dark green being strong buy. So as you can see, it's a pretty solid buy based on analyst recommendations. It's currently trading around 682 with the average analyst price target of 715. So we definitely have some more room to the upside. And also looking at the 52-week high, which was 740, there's definitely room towards the upside. Next, I have the Meta 6-month chart pulled up here in Thinkorswim. Looking at where Meta's currently trading, it's in between the top and the middle of the Bollinger Band. And again, for those of you not familiar with the Bollinger Bands are a technical analysis tool, and the stock generally tends to trade in between the bands 95% of the times. Now, there are instances where the stock may pop out from the Bollinger Band, but it quickly reverts back and gets inside. So having said that, looking at where Meta's trading right now, it's in between the top and the middle of the Bollinger Band. I see some support here at the 660 level, which is the middle of the Bollinger Band. Then we have the yellow line is the 100-day moving average, which is at about $628. So let's pull up the options chain and see how I would get an entry in Meta. I'm going to go with the July 18th options chain, which is about 33 days out from today. So we said the 100-day moving average was actually close to the 630 price point, which is a delta of 19. So to get entry into Meta, you could go with the 630 strike price and then sell the 630 put options and collect a premium of $760 doing that. Or if you'd like to be safer and go a little lower, you can also select the 625 strike price. And for this, you would get a premium of $680 with a delta of 17, meaning that there's a 17% chance of assignment at this strike price going 33 days out. My next pick is none other than Nvidia. Nvidia continues to be the backbone of AI and probably the most fundamentally strong stock in the stock market. In the last quarter alone, Nvidia posted over 44 billion in revenue, a 69% increase from the last year. And that's mind-blowing growth. And they're not slowing down. But here's the twist. Due to US chip restrictions, Nvidia is now excluding China from future forecasts, which is a potential $5 to $6 billion revenue hit. Well, how are they responding? By developing a new chip, the B30, that complies with US export laws and still serves China and Europe. Nvidia is like the shovel seller in the AI gold rush. Even with the headwinds, their dominance in the GPUs, and upcoming chip innovation makes them a solid long-term hold. Looking at Nvidia's fundamentals, looking at its 5-year chart, it's a pretty solid upward pointing chart. And as you can see, it's trading around the 142 level right now, and it's very close to its 52-week highs. It has a PE ratio of 46, pretty solid for a company of its size. Looking at earnings per share, it's been beating analyst expectations quarter over quarter. We went over the revenue previously, and the Q1 revenue came in at 44 billion with earnings of 19 or almost 20 billion. Currently trading at around 142 with an average analyst price target of 172. So there's definitely a lot of room towards the upside. Looking at Nvidia's 6-month chart, it's currently trading between the top and the middle of the Bollinger Band. And I see some support here, obviously at the middle of the Bollinger Band at the 138 level. And the next level of support is the bottom of the Bollinger Band, which is around 130. And if we keep going further down, we have a solid 200-day moving average support at a strike price of around 127. So let's pull up the options chain and see where I would potentially make an entry into Nvidia. If I go 33 days out to the July 18th options chain, let's see what we have here. So the 15 delta, we said the 200-day moving average was close to a strike price of 127, 128. So if you'd like to be super safe, you could go with the $125 strike price and collect a premium of $153. That's a 15 delta. Again, that means that there's a 15% chance of assignment. Or if you're comfortable picking up Nvidia at a strike price of $130, you could go with that strike price and collect $237 per options contract. For my next pick, here's what I'd like to say. Warren Buffett and Cathie Wood do not share the same investment philosophies, but both have Amazon in their portfolios. Billionaire hedge fund manager Bill Ackman recently just followed them, buying Amazon on the dip in April. Amazon had a strong Q1 with over $155 billion in revenue. But let's zoom out. Amazon Web Services grew 17%, and their ad business is now a 45 billion plus annual revenue stream. Not to mention their logistics moat keeps getting wider. Additionally, Amazon, along with other multinational giants, are also exploring to issue their own stablecoins in the United States. A move to launch crypto-based payments by Amazon that bypasses the traditional payment system would send shivers through the nation's banks and credit card networks and would add another source of revenue for Amazon if implemented. Looking at Amazon's fundamentals, again, we have a very solid upward pointing 5-year chart. We had an all-time high back in January, and since then, Amazon obviously dipped with the rest of the market, but it's now back up and trading around the 212 level. And looking at where it's trading right now, we certainly have some room to get back to the 52-week high. Looking at some financial highlights, Amazon has a profit margin of about 10%. It's been beating earnings per share quarter over quarter. Revenue and earnings have been pretty solid, and we have green and dark green recommendations, meaning buy and strong buy analyst recommendations. Again, we saw that it's currently trading at around 212 with an average analyst price target of almost $240. So there's definitely room towards the upside. Looking at Amazon's 6-month chart here on Thinkorswim, it's currently trading in between the top and the middle of the Bollinger Band, more closer to the middle of the Bollinger Band. So looking at the next obvious level of support, we have the 200-day moving average, which is actually around the 203 level. And we have the bottom of the Bollinger Band, which is around the 198 level. So let's pull up the options chain. And again, I'm going to go ahead and go 33 days out to the July 18th options chain. We have an 18 delta at this 195 strike price that gives us $215 per options contract. So you could go with that. Or we have the 200-day. This is a delta of 25. So considering it's trading around 212, I think might be a little risky if you don't want to get assigned at that level. And then the 13 delta is a strike price of 190 that gives us a premium of 152. So looking at all of these, I think I'd be comfortable with this 18 delta and picking up Amazon at a strike price of $195. If you do get assigned, you'd still get to pocket that premium of $215 for that level. My next pick is Google. In my opinion, Google is becoming the invisible AI giant in 2025. You may not hear as much hype, but they're doing big things quietly, like powering OpenAI with their cloud infrastructure. Yes, OpenAI, one of Google's main AI competitors, is now using Google Cloud for their compute. That's a huge vote of confidence, And with Gemini AI rolling across Search, Android, and Workspace, Google is deeply integrating AI into daily life. Google was also just cleared in a years long antitrust case in Mexico as the regulator found no monopolistic practices. Also, Google continues to integrate AI into its products such as Pixel, Photos, Search, and Cloud, driving shipments and user engagement. Looking at Google's 5-year chart, we have a pretty solid upward pointing chart. Google got to its all time highs back in January, getting up to this 204 level. It's currently trading around $175, and obviously we can see there's room to get to its all-time highs. And coming down and checking its additional fundamentals, Google has a profit margin of almost 31%, which is pretty awesome. It has a pretty good PE ratio of 1949, which means that it's actually undervalued because the S&P 500 currently has a PE ratio of about 26. So that definitely tells me that this is actually undervalued at the moment. Earnings per share beating analyst expectations quarter over quarter. Revenue and earnings pretty solid right here. And then you have a lot of buys and strong buys, currently trading at 175 with an average analyst target of 201, almost close to its all-time highs or the 52-week high. Looking at Google's 6-month chart, it's currently trading right at the middle of the Bollinger Band at a strike price of 174. That's the closing price as of Friday. So looking at the next obvious level of support, we have strong support at the bottom of the Bollinger Band, which is the 163 strike price. We also have the 50-day moving average at around the same price level, which is 163. So let's pull our options chain and see if we go 33 days out to this July 18 selection and look at a delta of 16 is the 160 strike price. So it's a bit lower than the bottom of the Bollinger Band. Or you could also go with the 165 strike price that gives you a premium of $235 per options contract and is a delta of 24. Now, keep in mind, Google's currently trading at 174. And if you go to an options chain 33 days out, I generally like to put some common sense into this and say, okay, well, I mean, if it's trading at 174, we're talking 33 days out. At what price would I be comfortable picking up Google, considering that a lot can happen in 30 days or so? So given that and just putting some general common sense, a level that I'd be comfortable picking up Google would be the 160 level. Obviously, the premium's less, but it gives me a cushion of about $14 in case there's a slight downturn in the market, which obviously nobody knows, when that could happen. So in that case, if it were me, I'd pick up Google at the 16 delta and collecting a premium of $153. And if I get assigned at $160, then I'd be getting Google almost $15 cheaper than the current price. My final pick for this video is Uber Technologies. In the first quarter of 2025, Uber reported significant financial and operational growth, highlighting a strong start to the year. Uber's Q1 2025 results show strong growth and profitability, with a 14% year-over-year increase in revenue to almost $11.5 billion and a 35% year-over-year increase in adjusted EBITDA to $1.9 billion. Trips on the platform grew 18% year-over-year, driven by increased consumer activity and platform engagement. The company also generated $2.3 billion in free cash flow. Uber is now profitable compared to Lyft, and they're moving into autonomy, partnering with Waymo, rolling out driverless deliveries, and cutting costs through AI optimization. Uber is also challenging Tesla by leveraging its existing ride-hailing network and partnerships to deploy autonomous vehicles, potentially outpacing Tesla's rollout of its own robotaxi service. While Tesla focuses on developing its full-service driving technology, Uber is actively commercializing autonomous ride-hailing through partnerships with various AV developers like Waymo and WeRide. This allows them to deploy autonomous vehicles across a wider geographical area and potentially scale up their robotaxi service faster than Tesla. Also, this allows Uber to operate a larger, more diverse fleet and potentially offer a wider range of services, including delivery and trucking, in addition to ride-hailing. So all in all, Uber is no longer a money-losing startup. It's becoming a platform company: rides, food, freight, and now autonomy. This is the next phase of transportation. Checking out Uber's fundamentals, it has a nice upward pointing 5-year chart. It actually got to its all-time highs back in May, touching almost $93. It's currently trading around $84, so just a slight dip from the all-time highs. Has a PE ratio of 15, so definitely undervalued and under the S&P average PE ratio of about 26. Coming down and looking at the earnings, we have earnings beat quarter over quarter, revenues been increasing, and looking at the analyst recommendations, we have a lot of buys and strong buys. Obviously, it's currently trading at $84. We just saw that. And we have an average analyst price target of about $96.54, close to $97. So there's definitely room towards the upside. Looking at Uber's 6-month chart here on Thinkorswim, it's in between the middle and the bottom of the Bollinger Band, trading at around $84. The next obvious level of support is the bottom of the Bollinger Band, which is almost at this $81 level, just about $3 lower than the current price or $4 lower than the current price. But if I'm going to go sell options to pick up Uber 33 days out, I'd like a little more wiggle room. So the next level of support is the 78.56 level, which is the 100-day moving average. Or if you'd like to be even safer, you could go with the 75 level, which is the 200-day moving average. So pulling up the options chain now, going 33 days out to the July 18th expiration. Let's see what we have for a 15 delta. We have the 75 strike price, which we said is the 200-day moving average. So that would give you about $71. The bid is actually 71, the ask is 90. So you could probably get that filled in between the bid and the ask, which would give you about $80. Or you could go with the next level, which is a 22 delta. And that gives you a discount of about $6 from the current price and gives you a premium of about $130 or a little higher than $130. If I were to make this selection, I'd go with the 15 delta and be safe. The 75 strike price, it's picking up the stock at a price that I'd be comfortable picking it up. That would give me a nice discount of $9 from the current price. So that's where I would pick up Uber. So there you have it. My top picks for June 2025. Meta's reinventing itself with AI. Nvidia is powering the AI revolution, and Amazon keeps building its empire. Google is the silent AI giant, and Uber, it's turning profitable and autonomous. If you enjoyed this video and learned anything useful, please give it a thumbs up, subscribe to my channel, and leave your comments below with any thoughts or feedback. If you'd like one-on-one coaching directly with me, click on the first link in the description below, and I'd love to help you out.